Yeah, we can see it.
Recording
What does it say,
starting
boot camp
now.
on?
Yes.
All right, cool. All right. Everybody can see it? Yes, what's your question? Oh, if they can't hear on one device, they let me know. Let me know because I don't want this to share with everybody. So we good. Yeah, you just let them know. Okay. All right. So here we go. So welcome to boot camp. So here's the thing. This is a boot camp. So I'm gonna be your drill instructor. Okay. So I got on workout clothes. So I suggest everybody. I suggest everybody wear some workout clothes. Just to remind you that this is a boot camp and there's going to be expectations here. All right, this is just what it is. All right, this is just for learning and application. Okay, that's what a boot camp is: learning and application. All right. So, just a disclaimer before we get started: unique experience and past performance does not guarantee future results. Trading in the forex. Trading the off-exchange foreign exchange market, forex, is a very speculative in nature, involves considerable risk, and is not appropriate for all investors. Therefore, before deciding to participate in the foreign exchange trading, you should carefully consider your investment objectives, your money objective, aka your level of experience and risk appetite, how much you're willing to risk. All right. Investors should only use risk capital. You should only use the money that you're willing to risk, okay, when trading forex, because there's always the risk of substantial loss. Most importantly, do not invest money you cannot afford to lose. So don't invest your house note money, car note money, Chris's money, all that money. Okay, we don't need to do that. There is always the potential for loss. Your trading results may vary. No representations being made that any software trading will guarantee or not result in losses from trading. The expectation is that for this trading, you will put into the market, will put you in a better position for wisdom, knowledge, understanding when it comes to trading the forex market. Now, with that being said, I expect all of you guys to be 75, 80, 90% traders, 75, 80, 90% traders right off of this. If you hear something print in the background, that's great. Okay? All right, attendance. All right, there we go. So, here we go. My expectations for you. Number one, that's my expectation face. All right? So, the number one thing I expect you guys to do is smile and take it serious. Okay? Take a lot of notes, do the drills, tons of them. All right, show up on time every day, be committed, free yourself from distractions. So you got to put the kids to sleep, put the wife to sleep, put the husband to sleep, put the dog to sleep, do what you need to do. That's why I did this at 10 o'clock. Focus, focus, focus. I really mean that. Always keep a positive mental attitude, come with the mindset to win. I don't just mean that in the market, but I also mean that I come with the mindset to win when I train. So if I'm watching videos or I train with other master traders, I'm always coming with the mindset. What you got? I got to get it, all of it. All right, ask questions. Now, my expectation of this trading camp here is to find your signature trade and beat the market maker 80% of the time or more. All right, that's my real goal for you guys, is to find your signature trade. And it starts with this session. I should have called this session the birth of your signature trade, because that's what it is. When you see how this market moves, it's gonna get pretty interesting. And I did do some slides, so if I think of other things that I need to teach on, I got a pen here and I'm gonna write it down. And at the end of here, I'll have a brain dump where I whiteboard my thoughts. And so you guys just have to let me talk and take good notes, because I promise you there's gonna be some nuggets that I'm gonna give out. And I may say, write this down, remember that, okay? And I'm gonna do my best to get the syllabus out to you. Not the syllabus, but some good tips sheet out to you that you guys need to have. All right, stuff that I use. All right. So what you should know by the end of the session: 3 different weekly patterns. All right. What you're gonna know is also the weekly cycle. What day you should start trading. What are the trap times? Some of these slides I'm gonna give out. I can give out the whole thing. 3 types of intraday trades. When do candlestick patterns matter? I'll probably just go over that, just say it, okay? And then what areas of the chart you should trade, that'll be more towards the end. And then there's a special trade, which is called the Brinks trade, which I'll give you the rules for that. So in this session, you will learn these things. And this is the very foundation of it. You nail this, I'm telling you, it's over with. And if you trade with Dr. K's money line, this is just gonna help you out. And if you haven't took a training, I strongly recommend it. And if you trade with other indicators or other trading systems, this is going to help you trade a lot better so you can understand how the market moves. So just kind of a whiteboard of a thought real quick, all right? There's 3 types of traders. Well, a little bit more than that, but I'm going to name the type of traders. This is Mike Waller's version, okay? Mike Waller says you got scalpers, all right? You got intraday traders, that's your day traders, okay? You got signal traders, or people who just follow signals. It's cool too if that's your vibe, all right? You got swing traders, all right? Then there's retail traders, all right? And then you have what's that other type of trader? Oh, people who just don't know what they're doing, all right? And I was all of them, okay, at one point in time. But there's one special type of trader that I'm gonna try to get you guys to become on this session, all right? Some people say, what's your trading style? What's this and that? Well, what type of trader are you? Well, I want you to answer them like this. I am a market reader. I could read the market, right? I could read the market. That's one of the big goals. That's what this training is designed for you to do, to read the market. That means if you're able to read the market, you could validate anybody's trading strategy, right? Like somebody say, well, I'm putting the fib on here. I'm gonna call crap in a minute. Or somebody say, I'm putting this indicator on. I'm calling crap on that if that don't work, because I know how the market is moving, okay? You are now the indicator. That's what it is, all right? Here we go. All right. So the objective for the boot camp is to start, like I said, learn how to read the market, add understanding to what you already know, in-depth. I may spell some stuff wrong or type some stuff wrong, but it is what it is. Intro and in-depth look at the patterns of the market makers, all right? They trade in patterns. All right, develop your signature trade. Only take high probability trade setups that will yield you an 80% win rate or better. And this is my favorite one. Trade with reason and not with emotion. Okay? I was guilty of trading with emotion because I felt like the market was going to do that. I felt like it, or I prayed about it. That's not a sound way to do it, even for all you praying folks. Okay, I go to church and love the Lord like anybody else. But with all you'll get an understanding of how it works. So you trade with reason. That's how that works, okay? A reason why it's doing that. All right, here we go. All right, so the outline for today's session: understanding the objective of the market maker, the weekly cycle rise and drop and rise, weekly cycle patterns, weekly cycle timings, weekly cycle zones. Notice I just keep saying that. Weekly cycle patterns, weekly cycle zones. Make sure she knows. Okay. Okay, that's fine. Weekly cycle patterns, weekly cycle zones. Weekly cycle patterns, weekly cycle zones, weekly cycle timing. You understand what I'm saying? If you can understand the weekly cycle, you got it. You got it. Okay? I'm telling you right now, you got it. All right? Intraday patterns, intraday timings, intraday zones. Trap patterns daily, trap patterns weekly, trap patterns time. I think that should be okay. That's a different thing. That's why we can get to that. And I'll first go over the Beat the Market Maker template, and then and do some examples of the weekly cycle and intraday cycle patterns as well. So we'll do that. So before we even get started, really quick, this is probably one of the most important things, because to understand how to beat the market maker, you must understand his objective, his objectives. All right, what is his? For all the Bible readers, the devil always come to steal, kill, and destroy. Well, the same thing for the market makers. They come to steal, kill, and destroy your money. All right, your trading accounts. The number one of their objectives is to seduce you to take a trade. They want you to take a trade position, meaning they want you to enter into a trade. I know that sounds oversimplistic, but they do this. They do certain things to seduce you and induce you to take a trade, only to track your money. All right. If you're not on mute, put yourself on mute. Matter of fact, let me mute everybody because I can hear somebody, and I'm easily distracted. Okay. So I'm going to tell you that I am easily distracted. So if somebody's not on mute, put yourself on mute. All right. So here we go. So that's their whole thing. Always remember that is your account is no use to him and to them until you trade it. All right. Their other objective is to create panic and fear, to get you think irrationally with your emotions because you felt like it. Get you into risk management trouble. Okay. And guess how they do it? Quick moves, spike candles, news, inexplicable price behavior out of nowhere, and they do trap patterns, okay? Their other objective is to hit your stop losses, activate all your pending orders, and force you into margin trouble and pocket your money. These market makers are liquidity providers. They work for bigger banks, bigger hedge funds. They control millions of dollars, not like 5 million, 10 million, maybe like hundreds of millions. Forex is a what, $5 trillion a day industry. They control hundreds of it. The big banks use it. You understand that? They hire professionals to get retail traders to shift the price. They use their money to do it. They do not have unlimited equity. They can't do anything all the time, okay? They only could move on average of about 600 pips a week, okay? Most of them, all right? And if they move more than that, they have to balance their books. Simple as that, all right? That means that's why you see slow movements, things like that, because they need to get that back off the books, all right? Just kind of giving you an overview of these market makers. These guys don't get tired. They're all around the world, clocking in. One worked the shift to Asian session, one worked the shift to New York, one worked the shift of London. You understand what I'm saying? These guys aren't tired. It's not like 4 or 5 guys. It's thousands of them. You understand? $5 trillion a day. It's thousands of these guys in think tanks, and these guys live very obscure lives. You understand? But they're rich off your money. All right? They are killing retail traders or traders who don't know how to trade. Just trying to give you an overview of who they are. All right? So, where's my next sliz eye? Here we go. All right. I want to get into this really, really quick. I hope none of my slides are out of order, but if they are, we'll get them in order. All right. So, hopefully we can go the full 2 hours. All right. So, yeah, you got to understand the market maker. Write this down. Their whole job is to trap you. That's their whole job, and eat up your equity. You understand? They control the World Bank. They can't do anything. The World Bank tell them, hey, you can't do that. You're not going to destroy anybody's economy. All right, Euro, the USD economy. They got restrictions on them. So I don't get it twisted. But I just wanted to throw that in there. But here's the key: you guys are trading all day long, every day, and I sit back, I watch the chat groups. I'm laughing half the time. And me and my guys, we laugh half the time because that's the first thing they want you to do, induce you to trade. You guys, some of you guys are good at it. I'm going to knock it. You're trading Sunday, you trade Monday, and you have no idea how the market's going to move. Well, the dealer, that's the time they set their traps. At the beginning of the week, Sunday, Monday, I don't trade Mondays typically, okay? The beginning of the day, right when the day opens, I got to hit the market. I got to get in the trade. No, we don't do that. The beginning of a session. It's the London breakout. It's going to break out, baby. Yeah, that's exactly what they want you to do. All right. The end of the day. I got to hurry up and get this trade, make some money for the day in. That's what they want you to do. All right. Inexplicable price behavior. Erratic price behavior. Vector candles, which we'll get into that. In the end of the week. It's Friday. They're going to trap your money on Friday, right? For example, you going long, their intention is to go short. They show you long, you take long, they close the market in consolidation. Sunday come, they gap the market on you 200 pips, 50 pips, 10 pips. How many of that happened to? I raised my hand right when I was in California. I got stuck in a trade, forgot to exit out. $500 lost right off the bat. It happens. That was my fault. Okay? That's their job. It's not time to trade those times. Understand that it's time to watch. So I'm forget what you know and shift your mindset for a second. Mondays it's time to watch, baby. Sundays it's time to watch. We don't really do that. We don't do that. That's unsophisticated. That's a retail trader's mindset. Anybody like that? Anybody like that song by Ludacris? Y'all like Ludacris? When I move, you move, just like that. That's how we trade. We trade in line with them. We are against the retail traders. We have the market of the market. We have the mind of the market maker. When they move, we move. Okay? We move because we can understand where their traps are. There's traps throughout the week, throughout the day, throughout candlestick patterns, and through the times. Simple as that. And they have patterns by leaving where they bought and where they sold. When we see these patterns and able to recognize it, then that's when we become a market reader, okay? Simple as that. So I'm going to get into the weekly cycle, okay? Write this down. Take a screenshot, do whatever you need to do, All right. I hope I'll expound on this. Now, remember what I said. Remember what I told you. The weekly cycle is the most important. I can go to any chart, any day of the week. I can call a trade any day of the week. 99% of the time, I know what something's going to do. Do I take every trade? No. Okay? But I know what the market's going to do because I'm a market reader. All right? So this is important. The weekly cycle. Shanti, I need to give you permission to do this real quick. I just forgot what we talked about. The weekly cycle, which is super important. 1 second, where's Shanti at? 1 second, forgot. All right. The weekly cycle, which is super important, sets the whole tone for the week. You don't need to go back, draw support and resistance trend lines. We don't trade that crap. All right. We use them differently. If I ever have you draw something on a chart, I promise you it's not a trend line. I don't believe in that. I've done that. I know 1,000 people teach market structure. All right. And when they teach it, in my opinion, they teach it wrong. Draw this trend line from 3 months ago, and if it breaks that, and it's gonna break it, or draw this support line from 6 months ago. It was a support on here, and every time it comes back, listen, don't do that. Don't do that. Stop that. If you're doing that today, I'm asking you to stop today. You don't need to do that. Okay? All right. So if you're not on mute, you need to mute yourself. You are. All right. All right. And then Brittany, you take attendance because I don't know how many people are supposed to be on it. All right. Make sure they're on here. All right. So second thing is, all right, the first 8 hours of the day, just kick it off right, represents the accumulation for the whole week. The first 8 hours of the day represents the accumulation for the whole week. Okay? The dealer, when I say the dealer, this is the same thing I'm talking about as the market maker. The dealer, what he likes to do, he likes to create a spread. This is not the broker spread. This is the dealer spread. What they do, they create a spread off that first candlestick, anywhere between 25 to 50 pips, sometimes a little more, sometimes a little less, right? And when they do that, and I'm going to show you on the chart, when they do that, what they like to do is they like to create it to break it. All right? They create what they call a channel. We're going to call this a psychological level. Understand where I'm going? They create a psychological level of a support line and a resistance line, a psych level, because they know retail traders trade this way. And their job is to make money for banks and other rich people and wealthy people, okay, and the super rich, all right? That's their job. So they have to get our money to do that, all right, and inexperienced traders. So they create this zone of between 25 to 50 pips at the beginning of the week. The Asian session, the first 8 hours of the week, is the accumulation phase for the week. That is the accumulation phase of traders, right? They gather this herd of traders, and the market makers will induce you to take a position by doing erratic price behavior, trading between these zones. And retail traders, because you are taught, and I know because I'm in some of these groups, we're taught to trade the break of support, resistance, trend lines, all of that, or the continuation of them. Retail traders trade breakouts, right? We love to trade breakouts. All you London breakout traders, I'm gonna kill that today because you need to really understand what that is. That's a lie from the pit of hell. You need to stop doing that. Buy stops, sell stops. That's terrible. Don't ever do that in your life. All right, you're gonna lose a lot of money. I'll show you how to properly place a buy limits and sell limits. Don't do that. All right. So, because you watched the strategy on YouTube or you saw somebody on IML TV do it, I'm gonna tell you don't do that. That's wrong. All right, because they need to trade the right way. And I'm gonna call you out of it. So it is what it is. So, all right. So now here's the other thing. Can y'all see my screen? I hope y'all can see my screen. You can't see my screen, let me know. All right. So here's the other thing. There are only 3 patterns the market maker use at the beginning of the week. Write this down. It's only 3 patterns, baby. That's it. That's it. 3 patterns. I'm going to give you all 3 of them today. All right? Now, you can be like me and master all 3 of them if you want to. I'm only looking for you to do one. Out of these 3 patterns is where you're going to develop your signature trade. They only got 3 major patterns that they use. All right? And inside those patterns, they got smaller patterns, which is nothing. And we know, since we know the weapons that they have, we're going to use that. Okay? We're going to use that. We're going to use that against them. We know what you got. We know where you're going. And when you do this, you do this. You know how stuff works, right? Like I know how my car works. I know how my computer works. I know how stuff works. There's no difference. I know how this works. Okay? So the 3 patterns that they have, you need to write this down. Safety trade, a multi-session M or W trade. Then you have a peak formation trade. Okay? That sounded like French to half of you guys out here. You got the safety trade, you got a multi-day M or W trade, and then you got a peak formation trade. That's it. There's no other patterns throughout the week. That's it. When somebody says, well, there's an M or W pattern, and I'm not talking about that, right? I'm not talking about that yet, okay? It's a pattern how they move for the week, all right? The dealer will correct after 3 days of rise or drop. That's it. I took the trade EU this week, right? Took one trade with a backup order. I caught the whole drop, the whole thing. Woke up last night. I said, Brittany, I caught the whole thing. She said, you caught the whole thing? I said, I caught the whole thing. I sat here and laughed. How much money you have on it? How much money you have on it? Don't worry about it. All right, you know what I'm saying? So, caught the whole thing. But I did that because I'm a market reader. You can go to any chart. Doesn't mean you need to take every trade. You take the trades that are very high probability. Even though I can get in here and call 100 trades, you know, even for next week, I can tell you what the market's going to do. It's the same thing over and over. The dealer will correct after 3 days of rise or 3 days of drop. That's it. 1, 2, 3 rise, 1, 2, 3 drop. Start with the hour chart. Right? Let's get into it. All right, here we go. So let me get into psych levels. Now, while we're getting here, a lot of you guys got this Beat the Market Maker template. I'm going to explain what the stuff means on the chart. So you need to be writing this down. I really don't want to go over it again. All right? So I'm going to tell you what these boxes mean. I don't have a lot of indicators on my chart. Do I use indicators? Yes. And they are only there to help me analyze data a lot faster. All right? Simple as that. All right? So let's go. Let's get into it. 1 second. Let me share my screen. You better knock this weekly cycle thing down. Shante, I gave you access already, so let me know. All right. You guys better knock this out. All right. I got 4 screens up. New share. Go to a new share. I'll do this new share. All share. Here we go. Share this right over here. Here we go. Screen 3. That's screen 3. I'm gonna share right here. All right, can you guys see this chart on my screen? Can you guys see it? I hope so.
Yes.
All right, here we go. I can go to any pair and do this. All right. So listen. Some people who use TradeView. Let me see. Let me just use. I'm gonna do this. I'm gonna do this. I'm gonna do this. Okay. I'm gonna break this down for you. Okay. I'm gonna break this down for you. Okay. All right. And if you don't have your chart set up, don't worry about it. We'll get to it. I'm gonna help you out. Okay. So don't trip. Mike, I ain't got this. I don't want to hear that right now. We good. Okay, I'm just playing with these boxes, man. Right? So on your chart, most of you guys are going to have a template. If you just right click, go to template, and just hit FXDD with stop hunt. Okay? You're going to have a chart similar to this. All right? Right now, I don't care about any of that. The only thing I care about is the boxes. I don't care about these indicators. I just care about the boxes. All right, so I'm gonna refresh my screen where I took this stuff off. Okay, so and I built the chart, which I'll show you guys how to do that at the end of the session because you're gonna have some assignments to do, and I do expect them to all be in. All right, analyzer expert. Here we go. So in your MetaTrader platform, right? You need first in your MetaTrader platform. There's a number of tools which we'll go over. All right, but the most important thing is right now I want you to recognize that this these boxes here, and I'm on the hour chart. I do this from the hour chart. We will go over some 4-hour stuff because it's going to get easy as time goes on, okay? This blue box on the hour chart, all right? Like most Monday, say Monday, Tuesday, Wednesday, Thursday. This is this week, so this is fresh. You know, I don't do all that pre-planning. I just do it fresh off the chart. So this is this past week, same stuff, right? The dealer accumulates in this box. This is the Asian session, represented by how many hours? 1, 2, 3, 4, 5, 6, 7, 8. This is 8 candlesticks. 8 candlesticks means you got eight at the beginning of the day, right here. This is 8 hours. 8 hours of accumulation. Where it says R, the range between this box and this box is about 27 pips. Remember what I said. I'm putting this together now. Remember, this is A to Z. We put this together. The beginning of the day, the dealer likes to, or the beginning of the week, the dealer likes to accumulate trade positions between 25 and 50 pips. Sometimes a little bit more, sometimes a little bit less. And he does that to what? To break it. To get breakout traders. Every freaking London breakout trader. I just want to, you guys know how to trade. I get mad at it, all right? Here we go. Thank God my mother-in-law stopped doing that. Okay, so she's on this trader. All right, here we go. Right here on Monday, I'm not trading this day. You don't know what the dealer's going to do. Technically I know, but most of the time you don't know. You don't trade on here because that's when trap moves are set in. The false move, then the beginning of the weekly cycle starts there. You verify it through 3 different trade setups, 3 different patterns throughout the week. And here you go. So the first 8 hours of the day, they accumulate traders. So in here, you can draw, if all you MetaTrader users, you can take one of these and you can draw a support line or resistance line or whatever right at the top of the Asian box, right at the bottom of this Asian box. Okay, you can do that. All right, if you like to do that. I don't like to do that. It's already built in here. So on that template that you guys installed, all right, here we go. I'm just gonna go to Insert, Indicators, Custom, Psych Levels, SM, Isley, Psych Levels. Because these psych levels, it will show up on the screen like this here. I like mine white. Okay, so I'll just change the color, the station identification. Okay, like mine white. Okay, these psych levels is your imaginary support or resistance lines. It's the highest of the first 8 hours, and it's the lowest of the first 8 hours of the week. What did I tell you the dealer like to do? The dealer, what he likes to do is do this. Boy, this is sauce already, right? Create this channel, boom, boom, create this channel, boom, boom. What do you like to do? Break it, boom, break it. He creates it to break it. That's it and that's all. He creates it to break it. I can go to any time frame and he'll do the same thing. I can go to any pair, he'll do the same thing. He creates it to break it, right? This brown box or this light gray box is a stop hunt box. I'm going to tell you what a stop hunt is. I think I uploaded. If I haven't uploaded, it will be in the chat. It'll be a glossary of terms. So just in case you forget that of something that I said, you could go back and reference that. Okay. A stop hunt is a false move against the real trend. Okay. That's what it is. There's the retail traders trend, and then there's the market makers trend. Last week, the retail traders trend was like, oh, I'm up. Market makers was like, if you up, I'm down. If you buying, I'm selling. Because they know that it's an accumulation of traders in this area. If they pump the market up, their real intentions is to dump it. That's it and that's all. We get in when they pump and we get in when they dump. At the beginning of it, that's the real trend. The trend is only your friend. No disrespect, but the trend is only your friend if you trade the market makers way. That's just what it is. Say what you want to say. That's what I'm going to believe. Okay. Now these are stop hunt boxes. Stop hunt boxes because retail traders. How many times have you been told keep a tight stop loss? Okay. Somebody say something in the chat because I'm gonna watch it. So watch the chat ready for me. So these stop hunt boxes are right below and right above the Asian session. They are 25 to 50 pips above and below the Asian session. This is the Asian session. Asian session closed. Do I trade the Asian sessions? Heck no. I wait until it's over with. Remember, trap moves at the beginning of the session, beginning of the day, right? We don't do that. We wait. The dealer, what he likes to do is he'll place the stop hunt boxes 20. He'll hit your stop loss 25 to 50 pips above the Asian range. 25 to 50 pips. Sometimes he'll just blow through it. Because he knows most retail traders trade between 25 and 50 pip stop losses. So from the bottom of this box to the top of this box is 25 pips. From the bottom of this box to the bottom of this box is 50. Same thing here. The top of this box to the top of here to the bottom of here is 25. To the top is 50. Right on the money. All right? Right on the money. And when you know that, and you know the dealer does that, there are certain trades that we take in these areas. And then when you have the dealer do something crazy like this, blow right past it, that's called an extended stop hunt. But I'm going to show you some ways to avoid stuff like that, and you can catch these moves. So you can catch the moves in this area and not in this middle of the road crap. We don't do that, okay? Not unless you're an experienced trader, all right? So now that we got that, this little box here is a special trade box. This box is called the Brinks box. This box here is called the Brinks box. The multicolored box is a Brinks box for New York. The multicolored box is the Brinks box. This box right here is the Brinks box for London. All right? That's just what it is. Now, this red little box here, okay, this is all New York session. The multicolored box for Fulham, New York is the Brinks, New York. That's when the dealers, it's like a dead zone in the market for just a quick second. That's when the dealer comes in and he talks to the guy that was on the Asian session here. He's getting ready to get off work here. This guy comes in London session and says, "Okay, where are you at?" He says, "All right, I got him going long, or I got him going short. I need you to come in, do this, do that, and do some taking position. I got about 500 million or 200 or $1 million trapped in this area. I need to fake out to go one way. I need you to dump it the other way." Simple as that. A Brinks trade is, write this down, a Brinks trade, you will learn about this. When the dealer comes in and creates a new high or new low and ends on a hammer candle at 3:45 Eastern Standard Time, AM. A Brinks trade New York is when he comes in, ends on a hammer candle, and he creates a new high or new low at 9:45 a.m. New York. Okay? We'll get into that. That is a special trade. You need to write that down because it's a ton of money to be made, okay, on those Brinks trades. We call it a Brinks because it's the Brinks. We look at the Brinks truck, and if it hits, you can back that truck up. I'm telling you, you can make a lot of money. All right? You said what? So I'll repeat it in a second. All right? I'll repeat it at the end. So I want to move forward. I don't have much time. I know folks sleepy. I'm up. I'm live. So if I got time, I got time. All right. So here we go. Like I said, there are only 3 patterns the market maker will use in the beginning of the week: safety trade, multi-session MW trade, peak formation trade. The dealer will correct after 3 days of rise or drop. That's it. Right? I caught this trade because I saw this. Easy money. I caught this. What was this? What was this drop? I caught this drop, this whole move, right on the freaking money. Right on this whole candle. I caught it. Right on the money. I'm going to show you something why I caught it. This is just psychological, right? Here we go. Let's get it. All right. I'm not talking about patterns yet. I'm just talking about the number 3. Just remember that. Keep saying 3 days of this, 3 days of that, 3 this, 3 that, okay? So they will correct. So I seen that the dealer, right? I got on this trade like Wednesday. Really, I held on it Wednesday, and I got this right out of the Asian on Friday. So I saw this move. The dealer came in Friday, right? And I seen on that he was rising Friday, and he rose all of Friday, he rose all of Monday, and then Tuesday he came in and he rose because he killed this. He beat out the high of that Monday. So normally after 3 days of rise, I knew he was going to drop. So because I did get in this trade on Wednesday, I got in about right here on Wednesday, and I had too tight of a stop loss, and it really stopped me out. And then, but I had a backup order. Remind me to talk about backup orders before we get there. I had a backup order, and it entered, which is just a pending order. It put me back into the trade at a higher lot size, but up here in this area. But when I saw this on Tuesday, I said, wait a minute. They corrected 3 days in a row because I only need to analyze the past 3 to 5 days of data. That's it. Whatever. No need to go back and analyze a whole year. That's crazy to me. All right. So I said, wait, he rose for 3 days. He's trying to drop. I seen the drop come in on Tuesday, right? I didn't even trade this day. I wouldn't even trade this week really, but I seen this drop come in on Tuesday. And then on Wednesday, I said, wait a minute, he's getting ready to drop again. He got to drop for at least 3 more days. And if he drops, he got to break this low, right? Because he got to continuously drop and break the previous day's low for at least 2 to 3 days. It came in on a Tuesday, right? A Tuesday. So I was like, oh, snap. Well, that means Wednesday it's going to drop, Thursday it's going to drop, Friday it's going to drop. I said, I'm in the money, right? I'm in the money. So what happened was I got in this goddamn trade. I'm not talking pattern, nothing, even though I knew pattern. I'll just base this off of 3 days of rise, 3 days of drop, right? I came in, I said Friday, and I'm only analyzing the past 3 to 5 days. Matter of fact, past 3. I looked at this chart just like this. I said, hey, it rose Friday, Monday, and I even seen Thursday where it had this ugly pattern here. I said, this thing was rising. I said Monday, and then Tuesday, it threw a nice little pin candle right here, right in this area. And then I saw this drop. I said, oh, snap. One of my trading rules is trade what you see and don't trade the middle unless you know what you're doing. And I was like, hey, I see something, and do I know what I'm doing? You got dang right I did. I took the trade. My boy Brandon was on here. Brandon, remember that? Because we was on here Wednesday. I said, B, this thing about to drop. And I said, we could do a pullback way up here. And he was like, well, if we pull back way up here, why wouldn't you wait? I said, man, hold on. Just sit tight, bro. I said, I'm not worried about that. I said, it's getting ready to drop. It's not going to break this high. He said, well, if you know it's going to do that pullback, I said, I got something for that. Don't worry about that. So remind me to talk to you guys about backup orders, all right? So the dealer, I saw this choppy move, right? I like to chop. Don't get it twisted. I like to chop. You saw this consolidation, all this crap. Most guys getting scared because they thinking volatility, right? Now, listen, I'm thinking you getting ready to make a move. I know your job. I know your job description. I know the job description. They put it out on Monster.com and Career Builder, so I know what you're supposed to do. Okay. His job when he do stuff like this is to induce you to take a position the wrong way, hold it for a day, 2 days, whatever, hours, a week, it don't matter, right? Hold it in this consolidated area because I know he's accumulating traders, right? He's accumulating traders. All of this is nothing but accumulation. So I know that's their biggest job to do that. So when I know that's their job, I don't get mad. I don't fret. I don't get mad. I don't get scared. I don't do nothing. I have reason. There is no emotions when I'm doing this. I said, you got to drop. So when that happened, I said, at least you got to come way down here past this low. My entry was right here. Even though it was a crap entry, I didn't even care about using anything as a confluence. Or somebody saying something in this chat. Okay. I didn't even say anything about using it as confluence or using an indicator or anything. This was just common sense. 3 days to rise, 3 days to drop. And you got to come back this low. I'm in the money. And if I had a stop loss, it was up here. I'm trying to work on my stop losses. Normally, I don't trade with one because it don't really matter, right? I know the direction of the market. But I'm going to suggest that you do, all right? So here's the other thing. The dealer did an aggressive pullback on Thursday. I could have got scared. 6 months ago, I would have been scared out my rear end, right? Did an aggressive pullback. I'm down negative. Didn't hit a stop loss. My stop loss was too tight, right? Too tight stop loss. I had a pending order way up here anyways. I jumped back in, not as a revenge trade. Don't get this twisted. I'm smart. That's what I'm training you guys to do. This mindset stuff here. You jump back in the trade because you still know the direction. You just find a better entry, right? And I can nail entries. Don't get it twisted. I can nail it. But you find a better entry. So I found a better entry. I held on to the trade all Thanksgiving. I'm sitting here like, oh my gosh, when this thing drops, it's going to be sick. It's going to be sick. because I know that you owe me money. And I know what you're going to do because I know your patterns. Guess what happens? Boom. I think we got home late last night from Brittany, mama's house, eating some chitterlings.
Ew.
And some and cornbread and all that stuff, right? I'm full. I turn my phone on. I get a notification. I think Dr. K or somebody said out there, EU GBP drop. I think all EU pairs, all E pairs dropping. I turn on my phone. I'm sitting up here, baby. I caught the whole thing. Dead serious. But that's the difference. This is just one way. I'm telling you guys, 3 days of rise, 3 days of drop. That's it. That's how that works. And they got to drop or rise higher than the previous day for it to be a valid rise and drop. That's it. That's not reading indicators. That's nothing. Because I understand the market maker cycle and their path. Anybody could trade that. My 12-year-old could do that. Or actually 13 now. Okay? That's it. Okay. So now that I got that out the way. Okay. Now let's get into the sauce. Okay. Here we go. That was saucy. You can trade that and get rich just off that alone. You can go to any chart and do it. Okay? Any chart. Here we go. I don't care if it's indices, commodities, it don't really matter. All right. Now, let me go back to this screen. Make sure I'm on my P's and Q's. All right? So sit tight. Got this PowerPoint going. Here we go. All right. Slideshow. Stop share, new share. Stop share, new share. We're gonna work it today. We're gonna work it. We're gonna work it. Where's my new share at? PowerPoint slide. Hopefully y'all can see that. All right, can y'all see that? Can y'all see the PowerPoint slide on here? Can y'all see that? I hope so. All right. All right, here we go. All right, here we go. First 8 hours of the day represents the accumulation session. First 8 hours of the week represents the accumulation session for the week. Like I said, there are only 3 patterns the market maker will use in the beginning of the week. This is the beginning of your signature trade right here. Out of these 3 trades, out of these 3 patterns, this is where signature trades are born. This is how you trade. So if we got swing traders on here, I got something for you. Okay? And I wish Dr. K was on here right now. I'm gonna blow her mind on this. Shantae, you need to share this with me. Okay, so you got a safety trade. 90%, I guarantee you, between 70 to 75% of the people is gonna go between safety trades and peak formation trades. I guarantee you. And then everybody else gonna do multi-session MW. Right? Everybody else gonna do that because but say it's gonna be a safety trade or a peak formation trade. That's it. All right. Peak formation is gonna get you paid. You can find a peak formation trade on a Tuesday. It's over with. Now watch what I'm saying. So everybody write down safety trade, multi-day MW trade, or peak formation. So let's get into it. Let's see where we at. All right. My homegirl Shantae. All right. She on it. Anything but scalp. Yeah. Well, if you scalp, this would be a better way to scalp. Like I said, see this when you read the market, this is the thing. I'm reading something in the chat. That's why I told you I'm easily distracted. So when you read the market, when you can read the market, you can put your strategy you can put your skills of reading the market to almost any strategy, and you can validate that strategy. No, I ain't gonna do that. Yeah, it's gonna do that. I don't care if you're looking at fibs, the cloud, Bollinger Bands. I don't care if you're doing some crazy stuff you saw on YouTube, or you got 1,000 indicators on your screen. You don't need it. You don't need it. Indicators should only help you analyze data faster. That's just my opinion. So here we go. All right, here we go. We'll bust this down all the way down. All right. Daily cycle. Okay, that's the daily cycle. All right, now listen, I'm going to say this. Now, I said the week. Now, notice what I'm getting ready to say for the day. All right? I want you to hear the similarities. Okay? The first 8 hours of the day represents the accumulation for the day. That's the Asian session. I said previously, the first 8 hours of the week represented the accumulation session for the week. There's the day and then there's the week. There are only 3 patterns the market maker will use in the day. We said at the beginning of the day. There's a safety trade, a multi-session MW, not a multi-day, all right? And then there's a peak formation trade. It's the same thing. That's why I say if you can bust this weekly strategy all the way down, you got it. You got it. You got it. I can literally stop and you got it. All right. And then the dealer will correct after 3 levels of days of rise or drop intraday. It's not necessary to count levels. You're not going to need to do that because you only trade in 2 areas on the chart anyways. That's at extreme highs and extreme lows, or near the high and low of the day, depending on which type of trade you take. That's it. 3. That's it. You don't trade the middle of the road crap. You don't do that. All right. So I'm already helping somebody now. Here we go. All right, here we go. Now I'm gonna break this down so it could forever be broken. Anybody watch Love Jones? That was a quick quote off Love Jones. Okay, here we go. The weekly safety trade. I'm gonna break a weekly safety trade down, and I'm gonna break a daily safety trade down. 90% of the people on here is gonna be between weekly trades. I'll say 75% is gonna be between, not the weekly, but it's gonna be between the safety trades. I already know. Every time I do this, I know. It's gonna be between the safety trades, and it's gonna be between the peak formation trades. Like most people are gonna say, I want to use these 2 as my signature trades. All right. Here we go. So the weekly cycle safety trade. The dealer creates a peak formation, low or high, on a Monday, coming on Friday, it don't matter, but normally on a Monday, or during a midweek reversal, and the next day, he never breaks that high or low. The dealer comes close to it, and the dealer may throw a candle wick close to it, and reverse off of that with a trap move, which is a trap move is basically candlestick patterns or a pattern. Okay, candlestick patterns or a pattern. All right. So a trap move identifying itself as a pattern where it looks like an M on the chart, a W on the chart, a V on the chart, or an A, or it looks like a half of Batman or inverted half of Batman, which is also known as an outside structure. If I ain't got time to get in that today, I won't. Okay. Now watch this. Watch this. Remember I said you can knock that week down, you can get that day down. Watch the day cycle safety trade. The dealer creates a peak formation, high or low, or a high or low, okay, during one session, not the day, but the session. So I say session like Asian or London. And then the dealer never breaks that high or low from the previous session. And then the dealer comes close to it, and the dealer may throw a candle wick close to it and reverse off of that with a trap move, identifying itself as a pattern such as a M, a W, a V, a half of Batman, or inverted half of Batman, which is also known as the outside structure. Do you see the similarities in this? So I'm going to show you a safety trade right now. Okay, so think about it like this. All you real estate people, construction people, homeowners, all of this, you're going to love this one. Okay, all right. Think about it like this. The dealer has already put in the foundation. Let's say the foundation comes in on Monday, and he poured the basement foundation. All right, and the next day he comes in, since the basement is already cured, it's already set in stone, right? The next day he comes in and he starts to build on top of that structure. Okay, so if the market is going, if he puts a peak formation low, so when I mean a peak formation, I mean an aggressive candle or a spike candle or a low, like a low place on the chart on Monday, and then on Tuesday he comes in and he never breaks that low. Okay, he pulls away from that, and it identifies like a W or a V, which I'll go over patterns shortly. Then that's a safety because he never broke that previous day. He never broke that previous day low, right? That's a safety trade for the weekly cycle. The safety trade for the day cycle is he does the same thing, but he does it within that day. So let's say in Asia, right, the Asian session, that blue box, he comes in, he creates a low or a high, it don't matter, a low or a high, okay? But he never breaks that low, or let's say he came in real low, and he never broke that low. He came close to it, but out of the Asian session, let's say in London, because you got Asian in London, he came close to it, and then he formed like a W on it. It's over with, it's lights out. W's in V patterns, in inverted back patterns, okay, are patterns for reversal, right? The half of the safety trade will show up like that. Okay? Though they will do that. You're going to hear me reference that a lot. So let me go to some examples. My homegirl, what's her face? Christy. We wrote down some stuff. So let's do some safety trade. This is like if there was one trade that I would say go get, this is it. This is it. This is it. This is the trade. So let me go to a chart real quick. I got you. Don't worry about it. I got you. We doing good on time. We an hour in. Oh man, we good. We good. Let's see if I can find a safe real quick. I got some. I like to do this fresh because I got some already set. I really want to go there, but I know for a fact that I got some doubters on here. And they say, oh, he just pulled that one example. So I'm not going to do that. I can go to any chart and find it. It ain't gonna matter, right? Safety trade right here. Here we go. Easy money. That was not planned. I just clicked on here. Can you guys see my screen? Can you see the chart? So where did we start? We start at the weekly cycle, right? That's number one. We started from the hour chart. Okay. Safety trade. Forget the boxes. I'm not concerned about the boxes on Monday. I don't care about none of that, right? Not concerned about that. I'm concerned about one thing. If I'm looking for a safety trade, I'm concerned about one thing. Okay. This here. What is the dealer doing? What did he do on Monday? On Tuesday, I get up 2:45, not 2:45. I get up about London Open. London Open. I'm not trading. I'm looking at the chart. I get it. All right. Looking at the chart. All right. And what I see is the dealer. I didn't trade this pair. So I see the dealer. Somebody say something because I'm in this chat. Okay. Yeah. So I see the dealer do this, right? I see on Monday, he come in, he created a low, created a high. The Asian range was about 21 pips. We're gonna get into some sauce tomorrow. Yeah, I don't want to miss that, okay? He created it, he broke it, he pulled away from it, right? He pulled away from it. So I see this on Monday, and then the Asian session, I see he's still rising, right? And he's way down low. Safety trades, you want to be about 70 pips, somewhere close to that, 50 to 70 pips. 50 to 70 pips from the previous low or previous high, right? So this is in line. I write that down, 50 to 70 pips. It could be 40, I don't care. It's just a variation on it. It ain't gotta be exact. This is about 62 pips. I'm like, whoa, well, he way beyond. So let me deal with psychology for a second. Think like a market maker. Stop thinking like a retail trader. Let me tell you something. Listen, yesterday, or not yesterday, I'm sorry. This is Tuesday. I'm thinking today the other day. All right, here we go. So think like a market maker for a second. Just look back. Remember I said you don't have to analyze weeks and weeks of data. Look, 3 to 5 days at the most. All right, here we go. If I'm looking at this chart, I'm thinking like a market maker. All of this here previous week is traders. You got swing traders, you got scalpers, you got everybody in here, and they trapped here, right? If he goes all the way back down here, that means he lets out all of these traders here, millions of dollars. Why would he do that? Why would you do that? He's not going to do it. Okay? Think like they think. That means they have to give up their equity, their money. On the bottom of your MetaTrader, it says equity and all that. That means your real money. That means he has to give up his real money to do this. You're not doing that. He got their money. He trapped them, stopped them out, got all the pending orders, all that crap, right? So I'm looking like, wait a minute, he's not coming here, right? He's not coming back down here. So I know I got a safety in play. They're way too far. If he got short traders in here to come back down here, he's going to let out all the short traders. Not unless he got a ton of pending orders down here, which we don't know anything about. And he comes back down here to grab it. That's the only reason why they do it. And that's called a multi-day and a multi-session trade or a peak formation trade. So that's why they do it. But watch this. This is what he do. Right out of the Asian session, right? He forms. I want you to see this. You got to train. This is why we're going to do these drills. Because I got to train your eyes. In order to understand the market maker, you need to retrain your eyes. And you only, hold on. Okay, here we go. Yeah, hold on one second. Clicked on something. Yeah, in order to understand the market maker, you got to retrain your eyes. He does this crap. Let me get a pink one. I like this pink. Let's do a blue. This blue will look good. He does this. Check this out. He rolls Monday, right? Consolidated, all of that, right? What do you call it? Accumulated traders consolidated, right? Got all the fake out here and continued his run, right? So what he did was right out the Asian session. He threw a little impact. I got it. I probably would have took it as an M because I saw it, but that's not the real trade. The real trade is I'm really looking for him to go long because he's not coming back down here for 60 pips and not to get your crappy order. Let's say even if you had 100 standards on there, which is about $1,000 a pip, he's not coming back down here to get your little $1,000 pip standard right here. He's not doing that. He got millions on the line here. He's not gonna say, well, I'm gonna go stop them out because they got $1,000 lot size on here and I don't want to get them. That's stupid. He's trading with millions of dollars. Okay. So what he does is this. Check this out. Classic. It's classic. Right? He forms this W here. Right here. What did I tell you they do? They never break the previous day low. Check. Previous day low is way down here. Check. He never broke it. He already broke the high, so we was good. I knew it was a safety because he broke the high, okay? So he never broke the previous day low. He was about 60 pips off from that. He ain't coming back down for 60 pips. Ain't no news coming out, nothing, right? And then what I say, a safety paid trade is when they never break it. And then out of the Asian session or out of another session, they'll form a W, a reversal pattern, a W, a V, or half a Batman inverted, whatever. He forms the W right here. Boom, boom. Lights out. I'm looking to go long all day long. New York session. Here. I didn't see the W. I see a V bottom, London session. This looks like a V going London, right? Now I'm gonna help you with some stuff to help you identify that. Looks like a V bottom, right? I got an indicator to help you identify W's, V's in there. So don't trip if you can't see it, right? He does that. If I saw this, time out. Because I know some people say everybody can explain the left side of the chart, right? And I get it. But let me show you something. I don't play games here. Okay? This is why entries are important, but direction is more important. Okay? Entries are important, but direction is more important. Let's say I got a crappy entry. I don't care. I got a crappy entry. Let's do this. Hold on. I got something for you. Okay? This was this day. Pay attention to the right side of my chart. Right? Let's say let me take this ugly indicator off here. Hold on. Let's say I got a crappy entry. Well, this safety trade ain't no joke. I got a crappy entry. My screen looked like this. Here, right? Let's say I saw this forming in this shift candle. This big candle is called a shift candle. Let's say I'm only trading from the hour chart. Let's say I traded from the hour. You're going to really nail it on 15. Don't get twisted because it's the same stuff, different day. Let's say this whole candle, I missed this whole move. Oh, it's a W. This looks like a clear W and it's a safety trade. Lights out, right? I know for the next day on a safety trade, I can ride that trade up the next day, right? And guess what it got to do? It has to still rise and it has to break the previous day high or low, right? It has to break the previous day high. So I know, let's say my entry came in somewhere right here, right? That's still a crappy entry, right? Came in right there. I can hang on to this trade. I can hang on. I take a little swap from the dealer. I don't care. I'm hanging on to it. I know you still got to rise, Doc. Get on my face, right? Still got to rise. 15 pips. I'll ride it all the way probably to the end of the day of Wednesday or close to it. Easy money. On a crappy entry. Let's say I got, and this is easy. Say I got an entry right here, right? As a buy. I got it here. That sucks. I did a little drawdown, 25 pip drawdown. That's nothing. You guys are afraid of drawdown. You nuts. All right, here we go. So I do a little drawdown. All right, and I'm still ending. Let's say I don't even get my full 50 because most of the trades I get is 50 pips. Let's say the guys on my team, my boy Ray kills them, right? So let's say I only go for 25. I still give him a little 25 pips. You can do a lot of damage off of that. But normally my moves are 50 pips, 100 pips, 200 pips. Let's go. I'll call that in a heartbeat. I can do that because it's 3 days of rise, 3 days of drop. Get out of my face. Monday rose, Tuesday rose, Wednesday rose. Time to drop. And it's on the safety. What's up? Anybody seeing that? I hope the lights are coming on, guys. Right. There are Thursday to Monday 3-day rides and stuff. Right. A midweek reversal, side note, a midweek reversal can come in anywhere between Tuesday and Thursday. It can start reversing Friday. Okay? Just depends on the last 3 to 5 days. What has it been doing for the last 3 to 5 days? Let's go look. A lot of people can make money right off of that, right there. This is called a safety trade. Watch this though. I see another safety trade. I'm going to show you the safety trade intraday. Intraday. It's the same thing, right? Okay. It's KG. Tuesday didn't rise. Tuesday, it did not rise. Here we go. Tuesday, it did rise. Look, Tuesday it rose, it beat out Monday. Monday, CHFJPY. Tuesday did rise and beat out Monday. Monday's high. The chart is showing Friday to Wednesday rise. It doesn't begin on Tuesday. Now, Tuesday, I don't know what you're talking about. So Friday was a peak low formation. Let me turn that chat off because it's going to distract me. Okay. So it did rise. Monday, Tuesday, Wednesday. Easy money. Reverse coming. Thursday, Friday, Monday, it's going to reverse again. It's going to drop again on Monday to finish out the previous week's cycle. On Tuesday, you can expect the rise. Is it going to do a stop on a low rise, or is it going to do a safety trade? Is it going to do a multi-session M&W? That's why. That's how that works, okay? That's why you need to wait until Tuesday. All right, so here we go. Monday, Tuesday, Wednesday, rise. Now watch this intraday trade. Watch this intraday trade. This is the Asian session. This is the Brinks box. This is the London. How many safety trades do you have here? Let's count. This is a multi-session safety trade. A multi-session safety trade doesn't break the high or low of the previous session. The low came in here on the Asian session. It did not break it on the London session. Anything outside of this box, all the way up to this box is the London session. So guess what? It didn't break the London session. It didn't break the Asian session low. The initial low of the day is the Asian session. It did not create a new low of the day. So guess what happened? This was a safety intraday. So could you have gotten money on London session? Yes. What about New York? Well, let's watch. New York session, you fell asleep. My homegirl Z likes her sleep ministry, so she doesn't trade London for real, okay? So what she'll do is she'll catch this safety trade, New York. She'll say, wait a minute, it didn't break the previous day's session, and it didn't break the initial low of the day. This is a safety trade. And let me just analyze it throughout the week. It's only been rising Monday and Tuesday. So this is the last day of rise. I can catch some pips here. Okay? Do you guys see that? Didn't break it. I'm only talking safety trades. Safety trades on the daily chart, on the safety trades through the week means it doesn't break the previous day's low or high. Okay? It pulls away from it. The safety trades intraday means it doesn't break the session high. The session high or low. It pulls away from it. See how it's pulling away from the Asian session in London? Right? Let's say you missed it. You're like, man, I missed it. I missed this trade here. I just freaking missed it, man. I missed it. All right? So you missed this candlestick, right? Take the next one. So what? You get a little drawdown, 20, 30 pips. Eat it. Eat the drawdown, trade with a small lot size. You can get major pips. You ain't got to spend put a big lot size on it. You can if you want, but I don't suggest it. Risk management is key. And you still made money all day long. That's a safety. It happens every day. I can go to any chart and do it. Okay? That's how that works. Check this out. Let's just analyze this a little bit better. Okay? You have another safety trade. Midweek reversal. The high come in right here, right? You try to catch this like you love CHFJPY. Whoever loves CHFJPY, nuts. Okay, here we go. So you love CHFJPY. You just gotta trade it. First of all, let me pause. Never be loyal to a pair. Always be loyal to the pattern, what the pattern presents, right? Thanks, Vic, for reminding me of that, okay? So never be loyal to a pair, always be loyal to a pattern. Okay? So here we go. Safety trade. You see this trade come in on Wednesday, it has a high. Thursday, you're in the market, you just got off work, you're a nurse, you've been working long shifts, you want to make a little money, you've been trading Forex, you're trying to figure out what's going on, right? So you come in, you look for your safety trade. Did it break the previous day high? And did it start pulling away from it? Did it throw patterns? Did it throw patterns? Yes, on here it looks like an A pattern, right here. A little A pattern. I got indicators that will help you identify these patterns. Don't worry about it. You got to train your eyes, okay? So if I look at Thursday, I call it safety trade Thursday. Easy money. Caught 2 validations for it. It didn't break the previous day high. And is this a session safety trade on the day cycle? Did it break the day cycle safety, the session safety trade? Did it break the previous session high in the Asian session, this blue box? Nope, came close to it, but didn't break it. That's a safety. I got 2 confirmations. Didn't break the day high, which didn't break the previous day high, and didn't break the Asian session high. I got a safety. Let's go. All right, so where's your entry? Where's my entry at? Well, you can use a candlestick pattern, moving average, crossover, other things. We'll go over that. But it's more important, it's the direction. Y'all see how that works? I'm trying to get some sauce to you. I'm trying. I can go to any chart and do this. It don't matter. That's a safety trade. That's a safety. Now, let's go back. How much do we got time? Is anybody on the time set? I said this. I put in the chat that this is going to run just a little bit longer than 12 o'clock. Maybe to like 12:45, 1 o'clock. Okay. I need to take a break. All right. Maybe like I need to take a bathroom break. Can y'all give me 5 minutes? All right, 5 minutes. All right, 5 minutes. Breaking down that safety. That safety ain't no joke. Here we go. All right, so it's 11:17. So let's just be back at 11, 17, 18, 19, 24, 22, 23. Let's take 6 minutes. Let's be back at 11:23. Yes, I did just count on my fingers. 11:23. All right, 11:23.
We can talk. DJ, you still there?
Yeah, I had to get some water.
Okay, cool. This is the shit I was teaching, remember?
Yeah, it's hard to see, like, I guess because of the reflection of
You getting some light?
yeah.
Okay, let me see if I can do something about that.
But as long as your recording is better, then that's all right.
How's that though?
It's still,
That's the TV there.
yeah, I think, but that's all right. You said you're recording it,
You
right?
goddamn right. Even what we're talking about right now.
Yeah. So hopefully the recording shows it better, because I mean I can hear him, and I'm trying to follow along on my computer, but it's hard to see like what he's talking about, because there's the reflection on your screen.
Okay. But you know, but because you already know the blue is the Asian session, you already know that. And you already know that these are your stop hunt boxes, 25 to 50 pips.
Yeah.
So that's what he was talking about. So there's nothing new. He's talking about the M and the W's. But that indicator he talked about is the shit. But you'll see.
He said the safety trade to identify is 2 indicators that will not break the high for the Asian.
Or the previous one. So what he's saying is this. I understand this too. From here, okay, so we're talking about a safety trade.
Mm-hmm.
He says, okay, they don't want to let this money go.
Mm-hmm.
So because all these people are buying. So when it gets to the next thing, you notice how over here in this Asian session. It doesn't get lower than that. The higher it does a little bit down here on the break of the day, but it doesn't get down to the low of the previous day.
Gotcha.
So what he's saying is that you buy here, I mean you sell here, right? It drops, you make some pips if you take it here, but it's gonna go back up. It's gonna go back up, and then this son bit's gonna drop in 2 days. So if you bought it here, sold it here for 2 days, I don't know how many pips that is, but
You can make some money.
I can tell you that from here, this whole box here, if you sold it here, this box is 21 pips. This box is 19 pips. So this is about 35 pips, I would think. Then you go over here. This might be about a 35. I'll say that's about 40. This might be a 50 pip, 75 pip range from here to here.
What is the pair?
This is
Is it?
It's Chef, right?
it's Chef JPY. Chef JPY.
I can measure what day are you talking about?
Okay. From hang on. From see, damn it, they keep typing shit, so I can't see the date.
It looks like we're right here, right?
Hang on, I'm gonna get it.
22 November.
22.
Oh no.
21 November.
21.
Yup.
So if you sold it like the top of 21.
Like that second red candle is coming down. I mean, because it's going up, right? And if you sold it at that long candle right there, we see right there,
So from there down
and you held it for 2 days,
to the low, it's
all the way to the Friday.
65 pips.
As I told you. And even if you close it out at the end of the day, what does it come out to? 50?
Yeah, 53.
Yeah, that's what I said. Because my goal would be to get 50 anyway. I wouldn't, and then.
So, yeah, if you had one position for 50 and then a runner,
Exactly.
you hit 50 and then you get to 65 and you can say, I'm going to close it out because it's 65.
Or
you
what?
say,
Or whenever it starts to reverse, then you just close it if you're watching it.
yeah.
Because you looking at this.
What was the other indicator for the safety trade? He said it's 2 indicators that you can verify that it's a safety trade.
The W and the V.
Okay.
But remember, I'm going to record it, so you're going to get this again. But let's go back to, because it's small on my computer, looking at his too, because he got the screen so they ain't go small. But go down to 16 November, at the bottom, right here, 16 November. Say you got in, you see it's red here, and then you got in at the green candle here. Because you didn't get that at the wick. How many pips that is?
Like
from here all the way up to there. I'm just curious.
from the bottom, the very bottom, after you get to your last bear candle,
Yep.
then you
Did you get a stop hunt candle?
Yeah.
So the bottom of that stop hunt candle.
That's 15 November at 1300.
Right where my arrow's at.
Or that's 16 November at 1300.
It's 16. And ride that all the way up to the top where we said that safety train for the maybe reversal would be. I'm just curious how long that, how many pips that is.